And working our way through the hour here, Mark Oppel. Thanks for joining us, whether watching RFD TV, tuning in on Rural Radio, channel 147 on Sirius XM. To the corn trade we go. Before we take a look at our friends from CME Group in Chicago, get an idea what's going on right where it's happening. Corn is down, higher close yesterday, a little bit back and forth overnight, but down 2 to 3 this morning. In fact, near lows of the day in corn now, early session here, first hour. December, 383 and a half. That's just a half a cent from the low of the day. That's down over 3 cents. So check the soybean trade, and soybeans still higher off of their early high, but they're still higher. In fact, well, I take that back. August is at the high of the day at 9.67. That's up over 7 cents. November new crop is up 7.5, 9.77 and a quarter, and the high today 9.79 and 3/4. So a couple of cents off the high for November new crop beans. The wheat trade we go. Wheat lower to start the day, still is lower. Chicago September down nearly 4 cents, 4.59 and 3/4. So below the 4.60 level. In fact, very near the low of the day. Check Kansas City, and the September contract there down over 3 cents and within a half a cent of the low of the day there, 4.63 and a half. And Minneapolis higher starting out the day and still trying to, and they are higher, not much. September Minneapolis up a penny and a half, 7.28. Let's go to Chicago and our good friend Todd Horwitz on Bubba Trading. It's bubbatrading.com. Great website there. Yes, sir. Salute to you, Todd Horwitz. Happy Tuesday, buddy.
Great to be here, Mark.
Absolutely. Always good to have you on here. All right, the grain trade heading into all the pressure we've seen. What's Todd Horwitz think about? You want to step in here, and maybe you have long ago.
I did step in, and I will continue to step in. I think we're still in pretty good shape. I don't really like those early morning rallies, those overnight rallies. Yesterday was a nice rally, and of course we had a powerful finish. And then today we came in a little higher, and now we're a little bit lower. And of course, they'll settle in here somewhere. I think they look really good. From a technical standpoint, I'm willing to jump in, and of course, I will continue to buy here at these levels. I think that corn and wheat look really well. Soybeans are still that one tenuous problem, right? And we're up now. Last I looked, they could have broken by now too, but last night they were up 8 cents. We got to get over 10 in soybeans for me to think about buying them again here. That's what I look for.
Yeah. So if you're a producer out there looking at the November 9.76 and the corn 3.83, wheat, we've got the harvest pretty wrapped up in South Dakota, but corn and bean producers, what would be a strategy longer term? Of course, not sitting here today.
Well, I think you know what you want to. I think what we need to learn as farmers and producers is always learn how to hedge our position in a way that leaves us the opportunity for the big market to the upside without taking that away, while protecting the downside. That's the biggest thing I think we can always work with everybody is to set that up so we don't take the downside exposure. But once we get our production cost in and we know where we're at and we can actually hedge those numbers, then we should take some risk off the table. And that's the biggest thing. We don't want to go from swinging one side to the other and take too much risk. We want to put ourselves in a position to lock it up and be able to sit there comfortably if they are selling off a little bit, or if they make the big market, then we make the big money.
Yeah, exactly right. Or the market knows here coming into September and October, if they've got to have storage space, they're going to have to move something somewhere. And that's not in a farmer's favor either.
No, it's not. Of course, a lot of farmers like to use the bins almost as a bank account, right? Because they know that they will come up and price back later, and that's a great strategy. And again, if you're able to hold and your costs don't get too crazy for holding, I'm a big fan of holding. As you know, I've done this over the years we've been together. We've talked about holding a lot, and then when they get the price, we pop it out and get rid of it. But now, I'm looking. I would start storing now. I wouldn't be selling at these prices yet.
Absolutely.
So that's how I look at it.
And before we take a break here, bubbatrading.com. You've got some opportunities and free services here, webinars that anyone, producers, users, consumers can take a look at and learn from.
Absolutely. I try to educate. Obviously I do have some subscription services also, but I try to educate. That's my whole business is I want to educate people to be better investors, whether it's in markets or in farming goods, and how to protect yourself. I think that's the whole key, is learning how to protect and get that financial literacy, because when it all comes down to it, everything we do comes back to money. And I'm actually doing one Saturday at noon Central Time. I'm doing one that you can get on my website and you can come for free. I'm going to talk about all the markets on that, so it'd be great to come by.
We'll talk about the livestock trade here in about 1 minute. Todd Horwitz, Bubba Trading. Write that down, bubbatrading.com, and learn all about that webinar coming up this weekend. But we'll talk livestock back in 1 minute. AgroLiquid is our sponsor here and great partner here for this portion of Market Day Report. Todd Horwitz loves AgroLiquid. They're up at St. John's, Michigan. Todd, I had a chance to visit with Troy Bancroft at the Ag PhD Field Day in South Dakota a week or so ago, and mentioned how much we all love the St. John's, Michigan, and want to go up there sometime. So they are great friends here. I know you like them too.
I love them. I can't wait to go. I'm going to go see them. I'm going to get up there. I promise.
Very good.
You tell them to make me lunch. I'll be there.
I'm sure they would be glad to do that. Hey, before we get to livestock, we set a new all-time record in the Dow yesterday, 22,121. What do you think about that Dow?
You know, obviously you can't step in front of it, but I think it's going a lot lower. You know, I'm not going to get into it today. There's no business. There's no action, and there's too much complacency. So at the end, there's going to be a level here that it's going to sell off from, and then I think it's going to be very good for the agricultural markets as well. That's one of my key points of everything, is that once this market starts to break, and it will break. I mean, there is no secret. Eventually, it's going to break, but that will be very good for farmers and producers, because that's going to bring the prices of their goods a lot higher as well, and that's really the big trick here, and that's kind of what I banked a lot of my things that I'm seeing based on what's going to happen in the equities. I think the equities are going to start to not collapse, but I mean they're going to have a pretty healthy correction coming up here pretty soon.
Yeah, maybe that money flow comes back into commodities. Would that also follow?
Well, that's exactly what I'm timing it for. Again, that's one of the issues. When we saw the market start to solve a little bit, equities, grains started to pick up right away, and that's the whole mix, right? They're going to start looking for new places for their money, and they're coming back to the grains and the agricultural markets, because that's a great alternative space that a lot of people love to invest in anyways.
Well, they want to come back to cattle right now and talk about livestock. What do you think about the cattle?
You know, listen, I happen to be, I'm a big fan right now of fats, October. I think that, they've gone a little lower than I would like to, because I was a buyer at 112. Now, the last I looked on my way up here, I almost fell off the chairs because they were about 110 and a half or 110.
Yep, exactly.
But I'm willing to step in here and buy. I think that they look solid. Feeders, I believe, have just another about $5 or $6 lower to come, and then I think they'll be as good as well. I think they will look to go higher, because overall, as you know, I'm pretty bullish the entire agricultural community stuff, and I think we're going to see higher prices. So as long as we can get to these levels, then I'm going to be very comfortable and going to want to step in here. And of course, obviously, I'll have an exit in case I'm wrong. But I think these levels look pretty solid, and I've been waiting for this 140 in feeders for quite a while. And I think we'll get there before the end of August.
All right, then we talk about the hog trade. Just a few seconds here, and lean hogs continue to defy a lot of folks here. Over $83, almost $84 a high today for August.
I'm going to October. I can't take that 83 anymore. I'm going to the 67 level. I'm a seller. I'm a seller in August right now at 68, 68.50. I think they should have some selling. The spread's gotten too wide. There's been too many things going on, and I think it's been too pushed up, too far, too fast. I look for a sell.
Very good. Todd, thanks for your time as always. We'll talk to you again tomorrow.
Thanks, Mark. Have a great day.
You too. Todd Horwitz, live from Chicago, Janet, and we will have Todd back with us here tomorrow to give us an update.
All right. Thank you very much, Mark.
You bet.